The truck market has fallen into pieces. Yes, 2024 has changed the game for truck markets, deteriorating its value every month. The car market crash has had a great impact on dealers, manufacturers, and buyers. But the real question is, would it survive in the coming years? Keep watching to find out. Market crash 2024. Before diving into the details, let's get an idea of what a market crash means. It is all a game of super high inventories, demand, prices, and interest rate levels. The problem starts when the dealers have a huge inventory. Before 2019, the dealers had about 2 to 3 million cars in their inventory. The game for the dealers changed when an uncalled event, a pandemic, happened. It made all the plants shut down, even the plants that were producing raw materials. Things got slowed down during the pandemic, but that's not the gist. The problem started right after the pandemic when the dealers resumed their work. They had to ship out all the raw materials, including those produced during the pandemic, which overwhelmed the supply chain and caused a massive shortage of car parts in the market. As a result, in 2021, the market hit an all-time low, while the demand continued to rise. Now, even if you have a basic understanding of basic economics, you might have understood what's going on here. High demand, obviously, means the dealers would raise the prices. For 3 years, the buyers were purchasing the products over MSRP until 2023, when the economy completely fell off. If you are living in the United States, you would have seen the economy crashing in 2023, with all-time high inflation and interest rates. So people could not afford to give priority to luxuries like cars. In such tough times, people didn't even think about getting trucks. This had a huge impact on the truck dealers, as they already had a huge inventory piled up in their garages. In January 2024, around 2 million in inventory were reported, but there were no buyers in the market. It was also because of the technological advancements. We will get into that later in the video. Before, let's look into the global economic issues. Global economic slowdown. A synchronized global economic slowdown in major markets such as the United States, China, and Europe was the main reason behind the truck market crash. Reduced consumer spending, trade tensions, and geopolitical uncertainties all led to decreased demand for goods, which resulted in fewer transportation requirements. With things shifting to online or hybrid mode, the demand for automobiles overall decreased. Now here is a surprising fact. Prior to the crash, the trucking industry experienced a period of rapid expansion. Yes, people were purchasing more and more trucks. This led to an oversupply of trucks, which ultimately reduced the demand. The trucking industry faced a problem of overcapacity, which worsened due to reduced demand. This led to a drop in prices and profitability for trucking companies. As a result, dealers had to reduce prices due to low demand, and January 2024 saw a slow month of sales for trucks. If you notice, there are discounts on Chevy on almost every new truck, and Ram is also offering up to 20% off MSRP. The dealers want to clear their inventory, and hence are trying to attract customers by offering discounts. If this wasn't enough, the fuel prices went to the skies. Escalating fuel prices further squeezed profit margins for trucking companies. There were times when we used to go out whenever we wanted, but now, there is a cost to everything. Many truck dealers were forced to cut costs or halter their operations altogether. The combination of overcapacity and rising fuel costs created a perfect storm for the industry. While the pandemic hampered most processes, it turned out to be great for technological advancements. Unfortunately, it became yet another massive reason for the crash of the truck market. With the new technological models, the conventional ones were pushed into a corner. Let's take an example of self-driving vehicles. The arrival of self-driving vehicles and electric trucks has caused significant disruption to traditional business models in the trucking industry. The emergence of autonomous driving technology held the promise of transforming the trucking industry by offering numerous benefits, such as increased safety, efficiency, and cost savings. However, the problem is that the trucks cannot be easily adapted to tech-savvy ones. Also, even if they do adapt to the latest technology, there would be immense job losses and regulatory issues, creating an atmosphere of uncertainty regarding the future of trucking investment and employment. The increasing focus on sustainable and eco-friendly transportation options has led to a race in the use of electric vehicles. This shift has been driven by concerns for the environment and the need to comply with regulations. Although electric trucks offer benefits such as reduced emissions and lower operating costs, their adoption requires overcoming challenges such as the development of infrastructure, the integration of technology, and supply chain management. Companies that didn't adjust to these technological advancements found themselves at a competitive disadvantage, which further worsened the market crash. The problem is that even tech-savvy companies like Tesla have witnessed a 7% decrease in prices over the years. Just imagine the toll it took on the already so-called conventional truck market. If this wasn't enough, the new entrants made the problem even worse. The COVID-19 pandemic resulted in a significant rise in the number of new players entering the market. In fact, the number of carriers receiving authorization from FMCSA increased by over 128,000 between 2019 and 2022. This sudden inrush of new powers made it more challenging for existing dealers to transport freight and added to the persistent problem of low rates and excess inventory. During the fourth quarter of 2023, the Federal Motor Carrier Safety Administration, FMCSA, experienced the largest net decrease in carriers, with more than 2,500 leaving the industry. Furthermore, the total number of newly authorized carriers decreased to its lowest point since June 2020. The majority of carriers entering and leaving the industry are small fleets with 2 or fewer trucks, indicating a correction in capacity. This trend is expected to continue in the coming months, although at a gradual pace. When will the market recover? Several industry experts are confident that market conditions are stabilizing, although there are no confirmed signs of a rebound yet. The year has shown some promise, but still, it is progressing at a plodding pace. It should be noted that the demand for the market is usually low during the first quarter, and it is expected to continue to be slow for the first half of 2024. Some people have a more negative outlook and believe that the market may not fully recover until 2025, despite the fact that rates are moving towards normal and there is an increasing number of authority revocations. One of the best indicators to identify when the market is starting to turn is through tender rejection rates. During the pandemic, rejection rates climbed higher than 20% on average, and in May 2023, the average dipped as low as 2.5%. This indicates that carriers were accepting almost any load offered to them to get business, often at lower rates and on less optimal routes. When rejection rates are higher, it signals that the capacity has been corrected. For many carriers, the next few years will be a game of survival. Although the trucking industry is expected to improve in 2024, progress will be slow and steady. In order to stay competitive, companies should pay attention to current trends as the market continues to recover. For example, they need to be careful of the potential operating costs. It is possible that fuel prices may decrease over the next 2 years, but insurance costs have been steadily increasing every year, with no indication of a decrease. There are ongoing challenges, such as high driver turnover, inadequate truck parking spaces, and regulatory changes in compliance that may further contribute to these costs. Therefore, it is crucial to prioritize driver retention, safety, and training. Also, the past few years have demonstrated the vulnerability of our global supply chain. Given the increasing frequency of extreme weather patterns and the ever-present geopolitical tensions, it is vital to develop contingency plans in case of any disruption. This can involve expanding the number of suppliers available and implementing predictive analytics to anticipate potential issues. The crash of the truck market in 2024 is a stark reminder of the weaknesses that exist in the global supply chains and transportation networks. By identifying the underlying causes of the crash and implementing effective recovery strategies, the concerned parties in the trucking industry can overcome these challenges and emerge as a more robust and more durable industry in the future. Do you think the truck market will revive in the coming years? Let us know in the comments section below. For more updates and similar content, hit the like button and press the bell icon so you always get intriguing content from us.